Hey guys, Jared Levy here from Peak American Financial Group, and I've got an interesting trade that I'm looking at. And again, this is something that's a little bit more of a theory and an educational lesson than an actual trade, because you all know that I like Bitcoin. I've liked Bitcoin. Gosh, I owned it at $600. Sold it at $5,000, thought I was a genius. Bought back in around 20 grand and again at 50. But here's the reason why I'm talking Bitcoin. As you know, I've talked about it on the show many times. I've recommended it. But there's a company out there called YieldMax, and they filed for a new ETF called YBIT. And what this unique ETF does is it actually synthesizes a covered call trade. Now, what is that? A normal covered call is when you own the underlying stock and you sell calls against it. What does that do? Well, it enables you to get more yield, right? Get more returns. It also can cap your upside, right? If you sell a covered call and leave it there, you have to sell the stock at the strike price you sold the call. But this YBIT, which again is really interesting to me, again, issued by YieldMax, it'll trade on the New York Stock Exchange. What they're doing is what's called a synthetic covered call. So they're selling a put, buying a call at the same time. That synthetically is like buying the stock. And you're saying, well, Jared, why would they do that? Why don't they just go out and buy Bitcoin or buy this? Well, what they're going to do is they're going to do these synthetics inside of other Bitcoin ETFs. And what they're looking for is arbitrage. They're looking for the best price advantage they can get. So they'll buy a call, sell a put, that's the synthetic long stock, and then they actually sell another call against it. Now, what this does, to simplify it all, is it gives you exposure to the upside of the stock, or in this case, Bitcoin. It generates a ton of yield. As you guys know, Bitcoin is tremendously volatile. So YBIT is likely to generate a lot of extra return. Now, the one thing it won't do is protect you if Bitcoin completely falls out of bed. But the buffering you'll get, the credit you'll get from this ETF synthetically, it should minimize some of the volatility. So the bottom line is, if you like Bitcoin and you're thinking about what ETF to buy, this YBIT could be a really interesting choice. And the cool thing is they make these distributions, so they kind of pay out like a dividend. One last thing to remember is owning this ETF does cost a little bit of money. Now, you don't have to pay it, out of your own pocket, but there is basically a management fee of about 1% annually. So again, not a whole heck of a lot. And do I think it's worth it to pay the 1%? Yeah, because I really like this strategy. And again, my name's Jared Levy. Have a great day.
Go to businessfirstam.com for where to see our show on TV.